first of all, the casino always wins to some degree, right?
There's no easy button in life. There is no get rich quick.
I quit my 40-hour-a-week job to become a trader for a better life, and then you're literally at a screen like 100 hours a week.
An exchange is for trading on. It's not your wallet.
We might get some pushback if we call this podcast #MeToo with Arthur Hayes, but
you want to be like a virus for the Lord Satoshi and bring forth the message of the good word to the people.
It's not every day that you get to sit down and speak with a legend in your industry, but I had that opportunity today. I spoke with Arthur Hayes, the creator of the Perpetual swap, which is arguably the most innovative and important product in the history of crypto trading, and also a man whose long-form blog posts have become canon for anybody who studies and is interested in the crypto space. You do not want to miss this epic conversation with Arthur Hayes.
Let's go.
I've always wanted to have a conversation with you because for a number of reasons, but the Perpetual swap is arguably the most innovative and impactful invention in the history of crypto trading. And effectively you invented it, right? What was the thinking behind that and how did that come about?
So basically back in the day, me and my co-founders answered every single support ticket. And, this is before Bitcoin derivatives trading was a thing. Everybody was used to trading on spot, trading margin, those sorts of things. And we would get a lot of support tickets by clients who were confused about some of the ways that the platform operated. Specifically, like what happens when a futures contract expires. We would get a lot of support tickets of people who were upset because they thought that something was wrong with the platform, but why the position disappeared on a particular day. And then we, point them to the documentation and explain to them, this is what happens when the futures contract expires. That's what that expiry date means. After that date, you no longer have a position. If you'd like to have a position, then you need to re-enter the market. And we kept getting those sorts of questions over and over and over again. And another common confusion that a lot of clients had was, okay, why does the futures contract price differ from the spot market? And then you'd have to go into covered interest rate parity, the differential of interest rates between two different currencies, time value of money, triangular arbitrage, all these sorts of things that you need to understand why a futures contract, especially on a currency pair, price is different than the spot price. And again, that was a lot of information for a lot of our clients, and they didn't really understand it. And as such, they preferred trading on margin, because that's very easy. Okay, I borrow some money from somebody, I go long or I go short. And I go long and I go short at the price of the instrument in the spot market. So it's just like trading spot Bitcoin, because it is. You're trading on the same order book. So we had this question amongst us, like, hey, can we create a futures contract that never expires? Because that would solve a lot of these issues. Number one, we have all these different futures contracts, quarterly, the March, the June, the SEP, the DEC, right? And that's splitting liquidity across all these different contracts. Wouldn't it be great to have liquidity in one contract? And, back in 2016, when we created this thing, we were the underdogs. We didn't have that much liquidity or open interest in our derivatives markets versus our, much more successful Chinese competitors. So we didn't want to split liquidity. Shitty liquidity across 4 products is, not a good thing. So we're like, okay, how do we combine liquidity? How do we make it easier for customers to understand? Because we didn't have a margin trading platform for people to graduate from. We didn't have a spot trading offering. We just had derivatives. So you literally had to guess. If you wanted to trade a derivative, you came here, but all the other stuff we didn't have. So it's not like we could bring traders on a journey through our different, from easy stuff of just buying spot Bitcoin to using margin to doing derivatives. So we had to create a very understandable, easy product for them right out the gate. And then it's like, okay, how do we cut down on our support load? There's only 3 of us answering these questions, and we're getting the same ones. So as any good technology company should do, you use technology to remove humans from the process. So what can we do? So we thought about it. And the first iteration of the product was, okay, let's create this swap. It's essentially a swap between Bitcoin and US dollar. It's synthetic because there's not actually movement of any cash flows between either side. And back then, the key interest rate was the Bitcoin and the US dollar rate on the Bitfinex peer-to-peer lending markets. So we'd say we would take that rate from Bitfinex and we'd use that to determine how much interest each side would pay each other, right? And the thinking was, okay, if Bitcoin's in a bull market, then US dollars are very expensive because people want to borrow them and they want to speculate on Bitcoin. Therefore, the rate on Bitfinex should rise. And if someone's going long the perpetual, they should pay more funding to the person going short to keep the market in line and make it expensive for people to go in the pro-cyclical direction of the market, right? You pay more as long, you pay money when the market's rising. If you're short, you pay money when the market's falling. And this was back in May 2016 when we launched this product, and the price of Bitcoin was going up very, very quickly. And the problem was that the interest rate on Bitfinex was not enough to deter people from taking the other side of the trade. So the longs, I'm just going to keep going long. And the price of this instrument just getting pushed at a higher and higher and higher premium to the underlying spot price of Bitcoin, which meant that the product was not doing very well and was failing. And so, the idea that I had was, okay, the Bitfinex rate is not responsive enough to the conditions of the market. What if we did a look back and we said, okay, we're going to track the premium or discount of the perpetual swap over our index, our cash index for Bitcoin. And then we're going to say, okay, for the next period, longs or shorts pay each other depending on what that historical premium was. And that seemed to work. And then all of a sudden, the interest rates got really expensive for some periods, and that deterred people from taking that position. Or certain people couldn't afford the funding based on their margin requirements, and they had to close before they got liquidated. And so all of a sudden we saw, okay, our markets are starting to look normal. The perpetual swap is starting to look like the spot market. It's behaving as the intention of what we did to develop this product. So that was kind of like, how we sort of got to where it is pretty much today of what this product is.
If you've been following me for the last few months, then you definitely know that I've been trading and investing on Bitget. Now listen, it took me 6 months to decide that they were going to be the sponsor for the newsletter. But once I saw their partnership with Juventus, that they were the world's leading copy trading platform in crypto, and also that they're a top 5 exchange by volume, well, I was sold and I was convinced. And I've been using it ever since to dollar cost average and to invest in Bitcoin. You can also trade there with leverage, but of course, be careful if you're going to do that. And I don't know if you saw the recent news, but they've also done a deal with Lionel Messi.
Bitget, perfect.
Now, you can get up to an $8,000 bonus using my link below, and you can trade spot with absolutely no fees. You also get a 15% discount on trading leverage. Go ahead and sign up right now using the wolfofallstreets.info/Bitget. Claim that huge reward and use the world's best trading platform. Right, and that's the product that effectively every single exchange that offers any sort of leverage is utilizing for the core of all of their trading. And that's what the customers are coming for. I mean, that must be quite a feeling to see something you invented become effectively the industry standard.
Yeah, it's great. And as someone who loves derivatives and has been studying financial markets, for my entire professional career, it's great to be up there with, individuals who have created, products that everybody trades, right? Everybody wants to be like, the old school JP Morgan people who created the credit derivatives markets, or, Myron Scholes and those guys in the 60s and 70s who created options pricing. And so, yeah, it's pretty cool.
So why don't we see perpetual swaps in legacy markets? It seems like a much more efficient way to actually trade than what we have currently.
Change is hard. If you're an organization and this product has been working for the last, 50, 60 years, why are you going to, take some crypto product and then, try to shoehorn it into however you define things? And as we know, like traditional TradFi markets are very big on classifications and labels. And if it doesn't fit inside the box, then you can't do it, right? And so I think it's a big mental stretch for a market. So, we're no longer doing quarterly futures contracts going on for 2 years. We're going to collapse all that into this perpetual swap thingy. And guess where it came from? It came from the crypto markets, everybody. And they're like, what are you guys thinking? Like, we were better than crypto. This is real finance. Like, those guys are retards. Like, so that I think just not going to happen.
Well, we've been giving them a lot of fuel to the fire to believe that we are all that. At the moment, I would say, like, we're at the depth of the deepest possible valley for perception of crypto, which obviously leads to the next question. Just generally, where do you think we are with this market? I mean, my argument is that we're somewhat bottoming. I think we would have bottomed if not for FTX, but feels like we have some serious depths of despair here and negative sentiment and stories that Bitcoin is going to zero and that crypto is dead. Kind of my favorite bottom signals.
Yeah, absolutely. I agree. I think we are in the bottom stages. And if we take a step back and we take a look at why we went up so high, right? We took a $400 or $500 billion market cap asset and went up to what, 1.5 trillion, 2 trillion at the top in terms of Bitcoin in a span of, a year. Why did that happen? Well, the biggest economy in the world printed the most money that they've ever done since World War II to, fight the COVID pandemic. And so, and obviously a lot of that money flowed into crypto. So if you have the largest ever, misallocation of credit since, a global world war for a pandemic, and some people argue that was completely unnecessary, then the excesses that it produced have to be unwound. And those excesses contributed to the behavior of, Sam Bankman-Fried at FTX, Kyle and Sue at 3 Arrows, all of the centralized lending platforms that are basically all bankrupt or insolvent. They all were able to achieve this outsized quote unquote success because they were riding on the back of the most amount of free money in the reserve asset by the largest economy ever seen since, the last global war. And the US wasn't even the reserve currency back then when they printed so much money. And so I think that it's very sad that all these things happened. Obviously, there's possibly some fraud or theft or all sorts of, bad stuff that happened. We'll see.
Maybe possibly.
Not for me to say.
Not me saying it, but maybe. Yeah.
But at the end of the day, like, how were 3 Arrows allowed to borrow? Or not allowed. Why would somebody lend 3 Arrows $1 billion in the collateral? Like, I don't care what they told you. It doesn't matter. Like, you should never do that. You should ask for something, at least, right? Why was SBF able to put on this, dog and pony show and con people as effectively as it was? Yes, he fit all the right characteristics, and I laid those out in my essay, White Boy. But at the other end of the spectrum, if you've got a bunch of money and you're an institutional money manager, you don't get paid unless you spend it. So you spend it on the thing that looks like that you won't lose your job at the end of the day. No one's going to lose their job because they allocated to SBF. Maybe they will this time, but I don't believe so. They wouldn't have. So, so I guess that's the thing. And yeah, there's the bad side of crypto, but it was fueled by a lot of money printing, and we've washed a lot of that out. So obviously, subsequently to the printing of the most money since World War II, we've also tightened financial conditions the fastest probably since Melker in the 1980s. So we've gone to the other extreme. Oh, guess what happened? We bankrupted all these business models that should never have existed in the first place. I haven't fully come to terms with whether or not I think centralized lending in the TradFi format actually works in a bear asset like crypto, where you don't have a lot of the legal protections that you have in a TradFi system, because those are part and parcel of the system itself. The whole point of crypto is that we don't need a legal system. We have, auditable blockchain code. Does that mean that we can allocate credit in the same way and use the same sort of underwriting standards? I don't know. Obviously, the track record is not so great at the moment. But looking forward, pretty much everyone who could go bankrupt has gone bankrupt. Like the largest exchanges, the largest centralized lenders. And they've all sold. What do they sell? They sold Bitcoin and ETH. And what's left on the balance sheet? Dog shit shitcoin that is super liquid that they created out of thin air, and you held on it. So I think the thing that you look at the balance sheet of Alameda, there's no Bitcoin on it. You look at the balance sheet of any of these of 3 Arrows, there's no Bitcoin on it. Because what do? They sold the Bitcoin as they were going bankrupt. They sold the Bitcoin during the wave before they went bankrupt. Now they're bankrupt, and now the court has to decide, how do I split up all these illiquid shitcoins that have no use case probably, and maybe we'll never have a market cap to support anything in the future. So that to me tells me that at least Bitcoin, which is the reserve asset of crypto, is doing what it should do. It's liquidated first because it's the most pristine asset and the most liquid, and therefore it's going to lead us out of this bottom in the first two. and obviously the shitcoins that follow, but there's a lot of bags held on bankrupt companies who need to liquidate those. But at least for Bitcoin, I'm fairly confident that the largest, most irresponsible entities have all had to sell all their Bitcoin to the diamond hands.
As one of the larger Voyager creditors myself, sadly, and someone I was friends with their team and was trading on the platform early. I would like to believe that it's over for CeFi and that nobody makes that mistake again, but I do not have that much faith in humans and their ability to FOMO into greed. But to your point, I don't understand giving a $700 million uncollateralized loan in any market, but it probably speaks to the situation that they put themselves in, which is that these platforms grew massively in a short amount of time because of the yield they were offering. And when those yields disappeared, they had to just continue to, behave in a more risky manner and continue down that curve to try to even just keep up with the yields that they had offered or lose all of their clients. So it seems like they built a business that could not be sustained unless the bull market never ended.
Exactly. And that's the same trade at Figueroa, the same trade at Alameda. At some point they said, we make more money if we go long and we're right. Absolutely. Problem is the market also goes down.
The thing that kills me about FTX just rationally is first of all, the casino always wins to some degree, right? And these are casinos that have high leverage. So you could just wait for retail, obviously, eventually going to make bad decisions and rinse. They had knowledge of the order book. They could literally sweep people's stops from Alameda and they still went broke. What kind of greed and hubris
shocking.
does it require to not make money in that environment? Like you're the house times 10.
Yeah, and you had free loans from the house. And what do you do with the loans? You could have taken the loan and just put them back in the treasuries. And you still would have made, a 4.5% net interest margin on $8 billion. Great. You're crushing it, right? Maybe that's unethical, at best. But
ethics were clearly not their principal.
It's like you could have made so much money in a much, a sub well at night and say if you eat all cucumbers he wants and, go hang out at the penthouse. But instead they went along, shitcoins.
You made an interesting point earlier about having to allocate if you're in one of these companies or in a situation like that. I think one of the untold stories that I've been thinking about, the Andreessens and the larger funds, they've raised $3.5, $4, $5, $6 billion in crypto venture funds that has to be allocated even in this environment. You can't raise $4 billion and wait 10 years, right? So there still has to be a ton of institutional money that's sidelined and waiting to buy, whether it's at these prices or with some turnaround. Maybe that's not Bitcoin, but in the VC space, it seems like there's still billions that have to be allocated right now.
Absolutely. But I do think that maybe when they make those capital calls, that money isn't there, right? So that's just what they signed the term sheet. Now,
right, true.
The types of persons who could allocate, they might have some real estate losses, some fixed income losses, and they're like, you know what? That crypto thing that I told you I was in for like 9 months ago, maybe not. And okay, I'll forfeit the other parts of what you've already invested in. I mean, it doesn't really matter. It's probably gone down 90% anyways, right? So I think that dry powder that they have might be a chimera when they actually come to call on it. But at the end of the day, like these large shops, they can't be doing deals that are $1 million. They need to be writing $100 million checks, $50 million checks.
Yeah, and you can't.
And to like series, companies in equity rounds that look like they're going to go public at some point. Okay, there's no crypto companies going public anytime soon. Like this is not happening. Okay, then I'm talking about some large big token sales. Well, who's the retailer who's going to soak up those tokens? They're all bankrupt too, right? So I just don't see how that money gets deployed, even if they call the capital and it's there. There's nothing for them to invest in because they're not the types of shops that are going to go around to like these little indie conferences and put a $15,000 check into like a true decentralized protocol that's actually doing something real. They can't do it. It just doesn't make sense for them. So that's great for me because I'm just an angel on a lot of stuff and I'm able to trade.
You can get $25,000.
Right, but you're not going to find the next Uniswap because you're able to allocate $10 million into a round. Probably not the type of company that's actually going to be pushing the envelope for this ecosystem.
Yeah, people questioned so heavily when Andreessen did the huge investment in Adam Neumann's new project after the WeWork failure. And my thinking was, they probably just had to get a couple $100 million and he gave them the opportunity to actually allocate that much in this market. Because how else are you going to get it in there? Not 10 million at a time, even in a VC fund like that outside of crypto. So here's a couple hundred. Why not? Has anything changed in your thinking now for the asset class as a result of this contagion? I mean, you obviously always referred to Bitcoin as the most pristine asset of all time. So I doubt that's the case. But I think a lot of people are conflating problems with the crypto industry with the actual assets themselves. And for us, I think it's easy to separate. But do you think that this has caused any meaningful harm long-term to Ethereum or Bitcoin as assets?
No, it's just proven the value prop, right? Given all that's happened, imagine in 2008, right? And you had Lehman Brothers go bankrupt. You had the contagion around every single merchant investment bank. You had AIG. People worry about the actual functioning of the financial system. Like, is the bank going to open? Is the exchange going to open because the counterparties went bust on all these interlinked derivatives? Did we do the proper accounting? Even know what's on their books, right? So the centralization problem during a credit crisis leads to the implosion of the actual underlying functional system. Nothing like that happened in crypto. Bitcoin blocks, Ethereum blocks, still produced, still validated. Smart contracts still worked. Uniswap still worked. I could still send Bitcoin on the network. You know, maybe it was a bit more expensive because there's a lot of stuff going on, but it still worked. Even though number two, number three largest exchange went bankrupt in 3 days, and yet everything that actually uses technology works just fine. That would not happen in TradFi. The entire TradFi system would be bankrupt, and we would be talking about, you know, not being able to use the bank. And a similar situation occurred. And if you've read recently, there's a lawsuit by Elliott to the London Metals Exchange due to the large nickel position. I think it was called the Big Shot. Some Chinese tycoon who basically tried to corner the nickel market and blew up. And the LME's defense was, hey, we couldn't enforce the rules as written in these contracts and ask for more margin because we were worried about these, you know, the exchange going, many multiple counterparties of the exchange going bankrupt. And that's a systemic financial risk. Therefore, we did the appropriate thing by not giving you what you were owed, Elliott Management, the hundreds of millions of dollars, because you were on the right side of this nickel trade. We're okay. Now, imagine if that had happened in crypto, right? Hey, we put out there that we guarantee that we're going to give you this money, but because everybody's going to go bankrupt and we're worried about the entire financial system not working, we're not going to pay out. That's exactly what the TradFi system does. Crypto doesn't do that. Bitcoin doesn't care which companies come or go. Ethereum doesn't care which companies come or like are there or not there, right? So that's what people have to understand, is that the actual technology, the reason why they got so excited about this in the first place, continued working, no issues. And people just have to be able to discern, like when they're investing in a centralized entity or using a centralized entity, there's nothing wrong with using them. You just have to understand their purpose and what they're there for versus the underlying technology. And obviously most people never get that distinction, and that's why most people will lose money in these type of situations, and there'll be those who are accumulating right now. And when the next bull market comes around and Bitcoin's at a much higher price than the last bull market, everyone's like, well, why did I invest at the bottom? Well, you thought, you know, Alameda was Bitcoin, or you thought Genesis, you know, was Ethereum, when they're just companies, poorly run companies, but just companies.
I loved what you called, I think it was Genesis Grayscale DCG unit, right? It's an old rap DJ. But then obviously then I need to ask about Genesis and Grayscale. Do you see that as a potential next victim of this contagion, or do you think that that's overblown?
I think Genesis is already a victim. They've already shut down withdrawals, and whether or not they declare formal bankruptcy or not, like, doesn't really matter. Like, you can't get your money out. Yeah. Like, I don't care if it's bankrupt or not. I'm not getting my money out. And then you have to wonder, okay, well, then is GBTC going to be unwound? I don't think so. I think it's pretty ironclad. That thing is there. And so the Bitcoin is there. Can't get it out. There's no incentive for, you know, Barry Silver to unwind Grayscale because it produces, you know, a few $100 million of free cash flow for doing pretty much nothing every year. So he's just going to keep it. Whether or not how he, you know, restructures his corporate empire, I have no idea. But at the end of the day, the Bitcoin and that trust aren't going anywhere. So I think it's kind of a Genesis sold all the Bitcoin they could have sold to try to stay afloat. It obviously didn't work. You know, if Barry had more Bitcoin to sell, he'd probably be selling it to not have to deal with this sort of issues. So I think, you know, the damage is there. I feel sorry for everybody, anyone who has their money locked in one of those entities, but for the broader market, it's kind of irrelevant at this point.
Feels like 90% of people in crypto have some money locked somewhere at this point.
Yeah.
just kind of the way it is. Well, if Bitcoin is the most pristine asset, then how do you view Ethereum?
So Bitcoin is money. Ethereum is a crypto commodity. And so that's my belief system. I know some people are in this Ethereum camp that it's the soundest money, but the use case of Ethereum is the power of the decentralized computer. And the analogy that I like to give is, imagine if you're Saudi Arabia. Obviously, you want the price of oil to be high because you make a lot of money, but they can't be too high, right? Imagine if oil was $1 billion a barrel. No one would buy any of it. Therefore, your oil is worthless. Same thing goes for Ethereum. If it becomes so deflationary at a certain point that the price of Ether is so high and its fiat value for gas is so expensive, no one's going to use it. And so I think ultimately, if we get to this situation where the Ether price goes too expensive, inflation will have to be introduced back into the system, because otherwise it will not fulfill its role as being the commodity that powers the decentralized internet, because that's the number one goal of Ethereum. And that's why I believe Ethereum is not money. It's it can act like money, but it's not Bitcoin, which is money. Bitcoin does nothing. It yields you nothing. You can't do anything with it. You can store it. You can send it to people that pay for stuff, and that's it. And that's the feature. And that's why it's there. People like to deride it for that, but okay, cool. Gold doesn't do anything either. Guess what? We have, thousands of people with guns guarding underground vaults with this inert metal sitting in it. It doesn't do anything, but we think it's worth something. So similar concept for Bitcoin, in my opinion.
Well, interestingly, though, I think that because of the merge, which I know you were extremely bullish around, and I too, it's funny that people have now ceased to be bullish about it just because it's been a few months, when we all know it should take many, many months and years to really play out. But welcome to the sort of memory of a goldfish in the crypto space. But that's a hard needle to thread, because if it does become particularly deflationary and we get another bull run and people get bullish on it, I think it goes to 10, 20, 30,000. And to your point, then it becomes moot. Does that open the door for other layer ones that are cheaper, faster, even if they're less secure? I mean, is that really their opening to sort of gain some dominance over Ethereum?
I mean, I wouldn't call myself an Ethereum maxi, because I think there's some philosophical issues that they have to solve in the next bull run. But I think all these other like Ethereum killer L1s, yes, they could be on paper faster, whatever, right? It doesn't matter. Every cycle has a particular flavor of L1 that's supposed to be Ethereum. This cycle, it was the Soul cycle, right? And yes, there are lots of ways in which Alameda and FTX influenced that. But at the end of the day, the zeitgeist was, okay, Ethereum's slow. This thing's fast. It's the new thing on the block. This thing is $3. Ethereum's, $1,500, $2,000, whatever it is, right? This thing a moon, and you can do all the extrapolations, right? It's the nominal price fallacy. Let's people flood into these assets, and every cycle there's going to be one. I don't know what the next flavor of L1, what's proof of what that is going to say, oh, this is the new way to do it. This is the better way than proof of stake or proof of work or proof of time or proof of block or whatever the fuck they come up with. It doesn't really matter. There'll be some promoter who's got a nice looking, pitch deck, who's backed by the right VCs who people think supposedly know something about crypto, and the single moon. I hope I find out which one that is and I get in on it.
Me too.
But
let me know.
It won't be anyone that. But it won't be something from the last cycle, because if you look at how many developers are in any of these projects other than Ethereum, it's like a few handful, maybe 100. That's not how you build a real ecosystem. If I'm a talented developer, I want to go where my application is going to be used the most. Where's my application going to be used the most? The Ethereum network. Okay, well, maybe if Aptos or Solana or Cosmos has a bunch of treasury money to hand out, I'll build something on there. But what am I building? I'm building a clone of Uniswap. I'm building a clone of Compound. Am I building anything actually new? Am I building any real new primitives? Absolutely not. I'm doing nothing. I'm Me Too. Again, you can make a lot of money in Me Too, but it's not going to make money in the next cycle, because we've moved on. We saw that was worthless, and they didn't have any actual adoption. And so what's the new thing that we can get excited about? And it can go from a few cents to a few $100s. That's what I want to figure out.
We might get some pushback if we call this podcast #MeToo with Arthur Hayes, but I think it would be kind of a compelling title now that you said it, honestly. And you said that you have some philosophical concerns with Ethereum that would need to be corrected in the next bull cycle. Can you talk about that?
Yes, if you have the issues that Ethereum has with the centralization of validators, right? And a set of validators have to adhere to some, domestic legal rules that go contrary to an open blockchain processing all valid transactions, then you haven't really accomplished much. And to the extent that there's some, very transformative application that some particular, entity doesn't like, and they're able to influence the way that blocks are validated, then the Ethereum blockchain is worthless. But again, we're humans. We see it in front of us. We see, there's 3 entities that control around 50 or 60% of the hashing rate, and they're all subject to US rules and regulations. Okay, there's nothing wrong with that. People make a lot of money in Web 2 that is predicated on a particular legal system. The issue is if we're really trying to build an open, transparent global network, is one country having, a larger stake than others really accomplish that goal? If so, then why don't you just go invest in a stock in the US or China or one of these other countries? Why even deal with having an Ethereum blockchain? It's expensive, it's slow, it has all these issues, right? I'd rather just go buy the NASDAQ. I'll probably make a better return. And so I think that won't be clear to people until we see a real popular application that's at some point not able to be used because some entity says no, and then the network has to decide what they're going to do. So I'm still long Ether at, from now until the next cycle, but, I hope to be out of Ether before that happens and back into Bitcoin, well before the market starts to actually, question what's going on.
It's funny because there's always that cycle. Even the back, you would almost call yourself an Ethereum maximalist, but in the back of your head, it's when am I going back to Bitcoin? Bitcoin maxis are going to love that, by the way. But it is true. Even on a longer time frame, it seems that it always comes back to Bitcoin one way or another in this market.
Yeah, I mean, of course, Bitcoin's volatile, right? It goes down and it goes up. But my whole thesis of my portfolio is I'm trying to save money in a constant form of energy. Bitcoin is pure energy. I burn electricity to mine Bitcoin, and that is how I make Bitcoin. And so to me, Bitcoin is the purest form of energy ever created, and I want to save in energy. That's all I care about.
You alluded to the fact that we're building a parallel global financial system, even a superior global financial system. How do we do that if every time we create a bridge, it gets hacked, exploited, every protocol seems to get drained? Seems like we've still got some major technological problems to solve ahead of us.
Absolutely. I mean, no railroads, didn't work the first time. Automobiles, planes, anything doesn't work the first time. It takes a while for the technology to diffuse. Okay, maybe we've gotten a little bit corrupted because we think everything's a 90-second TikTok video, and progress should happen immediately and not take time. But we're only slightly more than a decade into the largest social and financial experiment we've probably ever done as humankind, and to expect that it's all going to work perfectly and it's going to be this, perfect solution for, a TradFi system that works for a large number of people. It just doesn't work for a larger number of people. And, in my view, all we're doing is building a choice, right? You can go walk down to the branch and go visit your large, too big to fail bank and put your money there. That's fine. Or you can use an online wallet and transfer crypto. Each one has pros and cons. And depending on who you are and the situation in your life, you'll choose one or the other. But at least with our system, we're not forcing anyone to use it. It's a pure voluntary participation economy.
And there are plenty of places in the world where people don't actually even have access to the system that exists anyways and are going to be somewhat forced into DeFi and crypto regardless. I think that applies down to every single person who invests and trades in any single market. And you probably just described why people are so bad at trading, right? Because they would rather be right than be profitable.
Yeah. Or they want to invest in the right things, like with everyone else, because you don't want to be talking about, I don't know, nuclear waste facilities after Chernobyl at the cocktail party, right? So when in actual sense, it's probably the best time to invest in them because no one else wants to touch them. So it's a similar sort of phenomenon, right? All the people who believe these economist articles and Barron's covers of like Bitcoin going to zero, and they can, wag their fingers at people at the cocktail party and look all smart and stuff. And then you have the person in the corner cowering, like, I don't want to admit that, I guess, put $1 million into Bitcoin at, 15,500, right? It's that kind of fear. We fear the social rejection more than we want to make money.
Damn, we're Chernobyl now. That's wild. Bitcoin is now, that would make a good podcast title as well. But I mean, you have pretty intimate knowledge, I think, of the way that people trade and interact with markets, obviously, from running an exchange and creating one for so long. I mean, do you think that that is the principal reason that people are willing to, move their stop loss or refuse to take profit, is just that willingness to be right or that fear of being wrong? Because that's not even playing out in public. That's a very insular personal thing, right? That's admitting you were wrong to yourself, not even at the cocktail party.
Well, I think the issue with lots of traders is that they are looking for the get rich quick button. And that manifested itself in, very timely example. Anchor is paying 20% interest. I get zero at the bank. Hey, if I put $10,000 and I compound it at 20% over a few years, look at how fast I'm going to double, triple, quadruple my money. This thing's amazing. I'm putting everything in this because it's going to make me rich faster than even working my job, right? And we all know in the back of our minds, nothing ever is, there's no easy button in life. There is no get rich quick. There's outliers, and they're trumpeted in the media and made and put forward to make you think that you should be doing some not smart activity. But at the end of the day, there is no easy button. Life is hard. Hard work pays off. It takes time. There's no easy solution. And a lot of traders think that if I apply leverage and I trade well, or I do this and do that, I don't sit back and be disciplined about my craft, that all of a sudden I'm going to be going from a Toyota Corolla to a Lambo in a week. And I think it doesn't happen like that. And so I think that's the issue, is the lack of patience, the lack of dedication to a craft. Like I always tell people, hey, you want to be a day trader? Okay, you're gonna have your phone on all day. You're gonna be looking at your screen all day. You need to know every single flow in the market, the timing, when the miners sell, like which exchanges go from where, what is the open interest of a particular product, how do different time zones trade. Like these are all the things, the details that you have to understand if you want to be a speculator. Most people think, no, I'm just going to sit down on the computer. Yeah, I read some online magazine or something about trading, and I'm going to click a few buttons. I'm going to make more money than if I, did a 40-hour-a-week job. And this is not the case.
So traders should approach it as a 100-hour-a-week job. It's like, I quit my 40-hour-a-week job to become a trader for a better life. And then you're literally at a screen like 100 hours a week. But what you just described, I would say 99% of people who trade with leverage on crypto exchanges have never even heard of 50% of the concepts that you just said. They know support and resistance on a chart and probably know what MACD and RSI are, maybe, right? So they're not doing the requisite work, which means it's inevitable that they're going to lose money, right?
Yeah, you have to do the work. It doesn't matter, like anyone that you admire in any sort of pursuit has done, the 10,000 hour theory, right? They've done the work, right? If you're a trader, have you read all of the canon of traders? Do you know where these products came from? Like the fundamental, stuff behind them. Obviously, there's some completely speculative stuff, but as with everything, there's always a predecessor of which you've iterated upon. And if you don't understand that, then how are you going to understand why this is different or not different than the past? And so I think most people just don't want to put in the work. And therefore, they get the results like everyone else, which is over time, you lose money.
And you created these high leverage products in crypto. Do you think that obviously people should be able to do whatever they want, but do you think that there's a necessity for 100x leverage in crypto on volatile assets? Or is that something you just offered it because there was demand for it?
I'd say most people don't even use that much leverage, thankfully. But at the end of the day, the one good thing about leverage, and we're seeing this now, is that you don't have to keep that much money on the exchange. And so if you use it correctly, it's almost as if it's a short-term option. Okay, I can put this 100x leverage trade on. I know that the maximum I can lose is this. I know that my maximum exposure to the exchange is Y, and I'm comfortable with that. And so I can put this trade on knowing going into it what my loss is, and I can keep the rest of my funds in cold storage and whatnot. So yes, some people like to make these sensationalist arguments about the high leverage, but if in a crypto environment where you have exchanges like FTX going bankrupt in 2 days, then it does make sense to limit your exposure. And I'm always out there saying, hey, an exchange is for trading on. It's not your wallet. It's not there to hold your funds. Place a trade, do what you need to do, get your money off. Put in, use the technology as it's supposed to be used. This is about financial freedom. It's not about trusting centralized entities with your crypto.
So leverage is effectively about counterparty risk. And
There's a counterparty risk.
And of course, people, you said sensationalize the 100x leverage, but if your stop loss on your trade was going to be less than 1% away from your entry, that literally doesn't matter how much leverage you use, right?
Exactly.
I think people obviously complicate that. And now I think we're seeing a return, at least during this phase. I'm not confident it will last, in the ethos of not your keys, not your coins, and people really taking their coins off of exchanges, these massive outflows. Do you think that that will last? And do you think that exchanges actually should even be viewed at all or be allowed to be your bank or your custodian? Or do you think there should be some Chinese walls there that really separate those roles and take the coins off the exchange in the first place?
I mean, I guess the whole point of this ecosystem is for you to be an adult, right? And so the exchange is not there to tell you what you should or shouldn't be doing with your funds. The exchange is there to say, if you deposit one Bitcoin, that one Bitcoin is there. You can use it as margin. The exchange is not going to go out and, buy stuff with it. As Sam Bankrupt famously said and then deleted, FTX doesn't even invest their client deposits in US treasuries. Okay, whatever. So you shouldn't be doing that. Well, if you have Bitcoin, it just stay in a wallet, and that's it. And obviously, some exchanges have done like proof of reserves and proof of liabilities, those sorts of things. And the beauty of the transparency of like cryptographic assets is that we can do these things in real time. It's not as if I need to trust a statement from some too big to fail bank on their quarterly financial statement as to what they did over the last 3 months that they goal seeked on the last day of recording, which we know they do. They call it window dressing. It's a concept that exists all the time, right? And so I think there is this transparency of the blockchain if we choose to look at it, if we choose to demand it from the exchanges. But as you pointed out, usually what happens is, for 3 to 6 months, everybody's clamoring for these things. And then as the market stabilizes and, starts going up again, we forget all about that. And it's all about like, what's the new product? How can I get more leverage? How can I get more free money? Where can I borrow money to get along this market? And all the other concerns go out the window. So I hope that people take this to heart and, use a ledger or use another one of these hardware wallets and keep the majority of their funds in cold storage in their control. But I'm not, history has proven me otherwise. That the cares of the average person change quite quickly as soon as they forget about this.
People are making the same mistakes for literally hundreds of years and repeating cycles. So I don't think it's going to change much this time, but we do have cycles, obviously, and we could arguably say that we're at the very depths of a bearish cycle here in the crypto market. What do you think comes next? I'm not asking for price predictions tied to time, but in general, I mean, do you think that we remain somewhat correlated to the stock market? Do you think it's all about money printing and stimulus, or do you think that Bitcoin can once again decorrelate and rise in the face of a global economic crisis? Where do you stand on what's coming?
So I'd say next year sometime, I believe that the Fed is going to have to pivot. And that's mainly due to the fact that I believe that the treasury market and probably the investment grade corporate bond market are going to become dysfunctional. What do I mean by that? You have a bunch of supply with no buyers. The Fed's not buying, the treasury is not buying, they're actually issuing paper. All large foreign non-US governments are mostly net sellers of treasuries. So that would be, Japan and China. If you see accelerating more deals of Middle Eastern countries selling their oil, not in dollars, that also leads to less recycling of dollars, less purchases of treasuries. And yet at the same time, you have all-time high issuances of debt because, again, the baby boomers in the US are aging. They have entitlements, Social Security, Medicare. You have increased spending on defense. Who knows what this Russia-Ukraine conflict is going to lead to? Even if, the war ended today, I still believe that the defense industry is going to be pushing for more preparedness in the future wars, which means more spending, more government borrowing. And then, you possibly have a recession. The 3-month, 10-year spread that a lot of economists believe is the true recession indicator has turned negative, and which basically means that the treasury market is telling us that there's going to be a recession next year. So what does the government do in a recessionary environment? They need to issue more money to, provide that social safety net. Now, obviously, most countries can't do this. The U.S. can because it prints the global reserve currency, but they're the ones who are going to determine global dollar liquidity, which is what matters. So I think sometime next year, the politics of the treasury market and the corporate bond market are going to dictate that the Fed at a minimum pauses, at a maximum starts adding dollars back into the market. And that's going to obviously be positive for all risk assets, especially Bitcoin. Bitcoin is the last free market in the world, and so therefore it should pre-trade that happening. You'll see Bitcoin rise before the S&P does. And I think that's we stay correlated for this cycle. And then the next cycle, I believe, is generational collapse and something hopefully not as bad as the 1930s, but depression-like. Because if the Fed has to resume printing within a year of the largest sovereign debt bubble in the history of human civilization, then the next time there's a crisis, it's going to be the big one, the one where we actually have really, really high nominal rates on a lot of these large government bond markets. And then the question is, can Bitcoin outperform with a 10-year percent treasury and really high inflation? That's what we're going to do. Because inflation moves in waves. Okay, yes, we could go from 7.5% on the CPI down to 3%, but the next wave up is going to be 10%, 12%. That's what happened in the 70s. It's not this linear relationship. It's not this simple system. We don't know to understand what inflation is, but everyone experiences it differently, and it definitely isn't over once you've already crossed this Rubicon. So I think that Bitcoin and dollar markets are correlated up, 2024, 25. Then we move massively lower, and then the question is, can Bitcoin perform in a very, very high nominal rate and high inflationary environment? And that's the real test of this asset. Because then if it just goes down another 95%, like every other asset, when you have entrenched inflation of 10 to 20%, then have you really done anything? Has this technology really proven anything? So I think that's the test.
Can they get inflation back down to targets 2-3% before they're forced to pivot? Seems like that's highly unlikely.
Maybe, I don't know. Highly unlikely. I mean, the forces that are structural, the underinvestment in energy has been happening for almost 30 years. You don't all of a sudden reverse it in a year. You don't all of a sudden we're going to transition to green economy and starting this this song and dance 15, 20 years ago, and think that you're all of a sudden going to get oil is just going to come out of the ground and you're going to recover capex spending back to the levels to have enough demand, enough oil for the increasing demand. You don't, destroy some of the most, productive farmland in the world and, in Eastern Europe. And then all of a sudden, 3 years later, global crop yields are back to where they were. It's just fallacy thinking. It's people don't do the math. They don't think longer than 90 seconds on TikTok videos. And that's where we're in this situation. So, and the politicians follow suit. And so I think that's sort of my prognosis, and it's an open question of whether or not Bitcoin can be that asset in a true systematic reset, which I believe is coming, but not, in probably the next 5 years.
You talked about defense spending earlier. Did you see the recent story that the Defense Department failed their, I believe, 5th consecutive audit, basically every audit they've ever had, and we're only able to account for 39% of their assets? Basically, there's trillions of dollars missing from the balance sheet of the Defense Department, and they continue to raise their investment. It's insane.
And every other country is going to do the same thing. I mean, maybe they won't, I don't know the audits of other countries, but at the end of the day, everybody's spending more on defense. And so there's only so many humans to produce so many goods. And so again, the government will crowd out all across the world. And it's not just a US phenomenon, it's an every country phenomenon. Everybody is reshoring production to add resiliency to their supply chains. Everybody wants to be prepared for, a global conflict. Hopefully we don't have one. And therefore everybody's trying to stimulate at the same time. And it just isn't going to work.
Yeah, that's a vicious and dangerous cycle for sure. You talked about before taking 10,000 hours to become a master of something. It seems like you've spent 10,000 hours writing your blog because every time I read one, I'm like, damn, I'm 35 minutes in and I'm still reading this thing. What inspires you before we go to, write these long form blog posts, largely on the crypto market, but obviously on other things? And is that something that we can look forward to continuing to do?
Yeah, I like global macro. I manage my own money because I like to. It's fun. And at the end of the day, like I'm writing about stuff that I'm asking myself these questions. And if I could put out a very coherent, long form essay and explain a point of view and it makes sense, then okay, that idea that I have for my portfolio makes sense. You know, the positioning that I have for my asset allocation makes sense. There's been times when I've been writing an essay on an idea, I'll get done and I'll be like, oh, this doesn't sound so good. Like I shouldn't have that trade on. And then I'll go and I'll liquidate everything and I'll bin the article. But that's like, it's very cathartic for me. I enjoy it. And then also I enjoy the fact that people enjoy reading them and to get that opinion out there. And obviously, you know, you want to be like a virus for the Lord Satoshi and bring forth the message of the good words to the people.
Well, you're doing a great job of it. Where can everybody follow you after this and then check out, of course, your blog and everything you're doing?
Sure, I'm on Twitter at CryptoHayes, and my Medium is again at CryptoHayes as well. And the articles come out, you know, a few times a month depending on what's going on. And I hope and I appreciate the feedback that people give as well.
Yeah, I love the fact that it's sort of like due diligence for your own ideas, that you're sort of vomited out on paper. I do the same thing, and then actually makes you think through the process. So it's interesting for us to be able to share the thought process you're going through, and I hope that you definitely continue to do it, man. Thank you so much for taking the time to do this interview. Really appreciate it. Incredible insight.
Thank you.
That's dope.